Hello friends, so in this session we'll be talking about two most important sums because they have been asked frequently in CA and ICWA exams. Alright, so my only tip and suggestion for you all that for solving such type of sums, what you have to do is simply read the whole question, break the question into 2 to 3 different parts, make appropriate use of formula, and finally arrive at a correct answer. Okay, so we'll be learning all of this as and when we solve these two sums in this video tutorial. Alright my dear friends, fine. So let's start with the first sum of this video, which says a company issues 20,000 10% debentures of rupees 1000 each. The debentures are redeemable after the expiry period of 5 years. Stop my dear friends. So this is the first part of your question. Alright, now I ask you a simple question over here. Is the question saying you that these debentures are redeemable at a discount or premium rate? No my dear friends. Matlab, can I say that these debentures are redeemable at a par value? And what is a par value? Which is nothing but 1000 rupees. So in our formula, in place of RV, which is nothing but the redeemable value, we got the value of redeemable value as 1000 already. Do not touch that part anymore. Move ahead to the next part of the question, which says that the tax rate applicable to the company is 35%, and they have asked us to calculate the cost of debenture after tax if the debentures are issued. Look at the word that I am stressing right now. The debentures are issued at 5% discount rate with 2% flotation cost. So in this last part of the question, we have to deal with the net proceeds of a debenture. Alright my dear friends. So I hope you understood my concept of breaking the question into two parts, and that's the beauty of solving such type of sums. Okay my dear friends? Fine. So let's apply the formula now. So we know this formula. What we will do now is we'll separately identify the values of I, which is nothing but the interest rate, T, which is nothing but the tax rate, RV, we have already discovered with our smart work that redeemable value is already 1000 rupees. Okay, fine. Then we'll proceed on discovering the value of net proceeds. Finally we'll find the value of N, which is nothing but the number of years, and then we will simply substitute those values and bring the final answer. So let's start the sum now. In question, they have given us that the interest rate for debentures is 10%, and we know that interest rate is calculated based on the face value, and face value is nothing but 1000 rupees. So 10% of 1000 is nothing but 100 rupees. So therefore the interest payment is rupees 100. Fine. Okay. Now tax rate is already applicable at 35%, which is given in the question. Fine. It's piece of a cake for you. Now the redeemable value, we already discovered it to be rupees 1000. Fine. Now the challenge comes in finding the net proceeds. And my dear friends, in my introductory lecture where I had made you understand the concepts and bifurcation of a formula, we have learned the method of finding the net proceeds of a debenture, which is nothing but face value plus premium minus discount minus the flotation cost. Alright, but this last line of the question, look at my cursor very carefully my dear friends. Debentures are issued at a 5% discount with 2% flotation cost. मतलब प्रीमियम का तो बात ही नहीं हो रहा है. तो हमारा फॉर्मूला क्या बन जाएगा नेट प्रोसीड्स ढूंढने का? फेस वैल्यू माइनस डिस्काउंट माइनस फ्लोटेशन कॉस्ट. और फेस वैल्यू क्या है? 1000 रुपीज. उसमें से डिस्काउंट निकालेंगे 5%, उसमें से भी 2% फ्लोटेशन कॉस्ट निकालेंगे, तो विल गेट द आंसर एज 930. Okay my dear friends? Fine. So now what we will do is we will finally find the value of N, which is nothing but the number of years, and in this case the expiry period is given to us as 5 years. So after this we got all the values of I, T, RV, NP and N. Simply substitute those values and bring the final answer. Okay, so the final answer says that the cost of debenture for the issuer is nothing but 9.22%. Alright my dear friends? Fine. So hey, If you are able to solve such type of sums, then congratulations. This question was asked in CA IPCC exams in 2015 and also in 2017 exams. Now, let's solve one more challenging question, my dear friends. Fine, which says that G Limited issues 20,000 10% debentures of rupees 100 each at a premium of 10%. Okay, the debentures are redeemable after the expiry of a fixed period of 10 years at a premium of 20%. Alright, they have asked us to calculate the cost of debt after 30% tax rate. Okay, my dear friends? Fine. So, the trick for solving such type of sums is, I told you, break the question into 2 to 3 different parts, understand the question, make appropriate use of formula, and arrive at a final correct answer. Okay, my dear friends? So, in this sum, my first part of the question will be till here. Okay, where they are saying that the debentures are issued at a price which is nothing but face value plus premium. Alright, matlab face value kitna hai? 100 rupees, and they are being issued at a premium of 10%, matlab 100 plus 10, which is nothing but 110. So the net proceeds of the debenture in this sum is going to be 110 rupees. Okay, my dear friends? Fine. So, moving ahead with the second part of the question, which says they are redeemable. Look at the words that I am stressing, my dear friends. They are redeemable after a period of 10 years at a premium of 20%. Redeemable, premium of 20%. Redeemable, premium of 20%. So, what I am trying to say is that the debentures which have a face value of 100 rupees, they are redeemable at a premium of 20%. मतलब face value plus premium. तो redeemable value क्या बन गया दोस्तों? 100 plus 20, which is nothing but 120. Okay, so we got the value of RV orally, we got the value of NP, which is nothing but the net proceeds orally. Okay, smart thinking. Okay, my dear friends? Fine. So what we will do is simply apply the formula, identify the different values of interest rate, which is given to you as 10%, tax rate is given to you as 30%, redeemable value we discovered it to be 120, fine, and net proceeds we already discovered it to be 110. Right? So simply substitute these values and bring the final answer, which is nothing but 6.96%. So our final answer says that the cost of debenture after tax for G Limited is nothing but 6.96%. Right, my dear friends? Fine. So I hope you understood these two questions very nicely, and if you like this video, my dear friends, please comment, share and subscribe to my YouTube channel. Alright? Thank you so much.